All right, so joining us now for the regular monthly segment of Navigator Launch is our good friend Tony Greer. How you doing, buddy?
I'm great, Patrick. How are you today, man?
Oh, I'm doing great. It's crazy markets, isn't it? It's just amazing to see that it doesn't matter what bad news you throw at the market, just keeps going higher, right?
Yeah, it's unbelievable. I mean, we haven't traded through a global pandemic since 2003, and some of that muscle memory is coming back, and the S&P will definitely be the last one to give in and
Yeah.
buckle in some way at least due to this coronavirus. Apparently.
Isn't it interesting that when SARS was around and in 2003, the market was at the end of a bear market, and now we're at the arguably, I don't want to say the top of a bull market because we don't know whether it's officially ended, but but it seems like the market is at a completely opposite spectrum of where it was. So it's hard to use that as a reference, right?
Yeah, I totally agree, Patrick. There's a dynamic right now where you face literally, but a lot of the litmus tests that I put on for trades that I got from Dave Collum, my friend, up at Cornell University, and it's like literally, will I be furious with myself? When I look back on this, if I didn't put this trade on, type of thing, and now
Yeah.
I look back at this, and it's like, am I going to be furious at myself that the coronavirus broke out in China? I knew they were giving us false information, and I didn't sell all my stocks because they never went down fast enough, and then all of a sudden it's too
Yeah.
late. So what, that's the dilemma that we're all living through right
Oh
now.
yeah, for sure.
Everybody's claiming to be long with a tight stop, and the stop is a tight stop until they all go at once, right?
Right. And the liquidity event proves that your stop
Yeah,
is much lower than you thought.
yeah, exactly. Your fill is 20% lower than what you anticipated.
Exactly. So what are you watching nowadays?
I mean, I've been playing crude oil and writing about crude oil from the long side down here. I feel like uh, I think it's a good risk reward trade, if nothing else. If you look at, you've got the chart up there. We've had a
Yeah.
couple of bottoms around $50. And the theme that I've been writing about in my note is that the oil market is balanced, and I said that before the attack on the Abqaiq facility in Saudi Arabia. I'm saying that here in sort of what this period of what we'll call what we know about the coronavirus. And I think that all of the bad news has been thrown at the oil market and the commodities market that they can see in the short term. So,
Yeah.
and I only like it because the risk reward lines up on the charts. I can stop out somewhere, reasonably below $50 if crude oil spends much time down there. But I don't think it's going to. The situation continues to happen in crude oil where either the price rallies on some kind of a shortage and then it's brought back to life by the reality of there being plenty of inventory, or we've got a dip right now, because we've got a lack of demand destruction, a demand destruction dip, right? And then my bet is that there'll either be a supply disruption, or people will start buying it for the value, of buying oil down
Yeah.
here, or all of the bad news in the coronavirus is out at the moment, or at least all the bad news that the market is going to listen to is out. So I feel like there's a good chance for short term, not a huge payout trade, but a good risk reward, and that's where my chips are right now. I've got some oil, I've got some oil calls, and I've got some few oil single name stocks, some refineries, and that's it. But I've been writing about it in my note, and so far so good, man.
So listen, when you're using your moving averages, we have the 50, 100, and 200-day moving averages on here. Is your short-term targets as oil approaches those levels? Is that the way you'd look at where the short-term bounce can head up to?
Yeah, for me, Patrick, this is a super short term trade. Like I've got like hair on, a position size that would make the hair on the back of your neck stand up. So all of the bounces that occur in the things that I'm long right now, I'm a seller of. So it's
Right.
kind of like I've established my position, I placed my bet, and now I'm just going to let the market take it away from me. I mean, I don't think this is going to last more than maybe 2 weeks or something like that. But to me, in crude, it's funny you mentioned the moving averages, because recently in crude oil, for me, those have been providing where value is for crude oil, right? Like those have
Right.
been, the mean. And if you want to, sort of sit on your hands while it's sitting in that range, and then, be short above that range and long below that range in some capacity, when it feels safe, that's been a great trade for me. So I'm going to keep doing it until I get completely fried.
All right.
You know?
Well, are there any other commodities that you're keeping an eye on, or currency markets, or anything? Bonds? What's on your mind?
Yeah, I'm watching the base metals, because they're going to be an indicator. They've were the first ones to take it on the chin. When the virus came out, copper went straight down. The problem with trying to play copper is that the copper market's also balanced, and the price range is balanced. You look at copper. To me, LME copper is 550 bid at 650. Comex copper is probably, what is it, 250 bid at $3 is the equivalent or so.
Yeah. Yeah.
um, and no matter what, like we said, same thing as crude oil. It doesn't get going on the upside, and there's no follow through on the downside. So that's why it's been difficult to try to place bets in base metals. But I'm kind of just watching them for directional indicators, and I see, they've been telling a sort of truer story about this virus than the stock market has, in my opinion. So. We'll see how long the stock market rally lasts, and if it doesn't come back to earth, somewhere sensibly into the moving averages. But it's still a
Are
bull
you
market.
are you trading any of the copper stocks? Because it's interesting that like Freeport and Southern, they haven't remotely broken as badly as copper itself has. How do you have any opinions on that?
No, no, Patrick. Those are, like I said, those are like range bound. There's not enough volatility right now. There's not enough
Yeah.
reason to place a big bet in any of those names. I don't. Those are the names you play when there's a sort of, maybe a supply deficit in copper that you think the stock hasn't seen coming yet, or something like that. Right now there's really nothing interesting there for me.
All right. How about gold? Any thoughts on what's going on there?
Gold is a sort of, I keep calling gold the feed up on the desk trade. Like it's like you've got to be long it. You can't be too long that it's going to hurt you if it dislocates, because it's a very popular trade. But I think you can be patient, because gold has shown that it can go up in two different scenarios. And that's really important to me. When we were in that huge bond bubble last summer, gold was roaring because the negative rate pool was huge. And now gold is firming up because all the central banks in the world are adding to their balance sheet and diluting their currency. So gold is kind of just looking over and saying,
Yeah.
yeah, there are 20 central banks on the planet easing right now. Gold is going to remain bid.
Right.
And so that's just how I'm looking at it. And yeah, there's one thing that I think is important that people in the market, long-term holders of gold have an interesting perspective, and some of them that have it, for the doomsday scenario. And I was just having a conversation with some people that sort of are holders of gold for the doomsday scenario, for a currency devaluation, an absolute financial panic and stuff like that. And I sort of wanted to remind them that you're not going to be able to use or sell your gold in the event of a panic, right? Like gold
Right.
is going to be utterly, utterly useless, right? Like if you have large blocks of it, you can't carry it around, you can't bring it somewhere. Nobody's exchanging gold for food or medicine, in a financial catastrophe. In fact, the price of gold might not even be going up anymore, because what happens in financial catastrophe is people that are over levered have to just sell their positions. So if people are levered long gold waiting for this, they're going to be sellers of gold when a catastrophe hits. And I think people forget that if they've never lived through scenarios like that's one of the
But
dynamics where gold is not a great doomsday play.
can you now make that same argument for real estate or anything else? Like these assets just won't be liquid during those scenarios, right? Like everyone who thinks they've got some sort of value put aside in that those assets are going to be very illiquid in
Oh,
those periods
totally.
when you need the liquidity, right?
Totally, man. I mean, I don't have any experience with a real, financial system coming apart or panic, but we lived through the great financial crisis, and, had a sort of whiff of what that might have felt like. Had things gotten terribly worse and we didn't rescue the investment banks, et cetera, et cetera. But, and that's another scenario where that's, when where doom is coming, people are going to have to sell all their levered positions, and if gold's one of them, gold's going to get sold along with the stocks, right? So
Right.
that's just how I look at it.
Do you have any thoughts on stocks and bonds at all? What any opinions on how to put on some trades there?
I mean, I'm long. I've been bullish stocks. I took a quick breath. When the coronavirus hit, just like everybody else, and looked at it and said, okay, like, yeah, you can look at it right there. You saw the volatility. We didn't even pierce a moving average, and the market was as soon as it was back up above 3280 for me. That said, okay, it was the market decided that the coronavirus was not a big enough event. Now,
Yeah.
there may be more damage than the market expected coming down the road, and things could change. So we always have to think, freely. But right now, the bull market is prevailing. People at FinTwit are still throwing eggs at it. Nobody can embrace it. Meanwhile, you look at Fang, Patrick. I don't know if you can call it Fang, but Fang is one of
Yeah, yeah,
like the
yeah.
most. It's like one of the most bullish charts that I've seen. If you've got like a 10-year chart on Fang, the Facebook, Apple, Amazon,
Well,
Netflix.
this is the that Fang Plus index future that I've got up here.
Oh,
But
okay.
I mean, it's still going to give you that
Yeah, yeah. Look
parabolic
at it.
move. That's
Look at it on a long-term chart. Does it have a 10-year chart? Yeah, even a weekly is
no,
fine.
no. It's going to 2018 for this one, but still,
Okay. If you yeah, put it this way, I could probably send it to you real quick. But if you looked at a quick Fang chart over, and I'm talking about Facebook,
yeah.
Apple, Netflix, Google, the thing rallied for 10 years from 2008. Essentially, would have rallied if it was
Yeah.
put together then.
I mean,
You know, it rallied for 10 years and then it consolidated from 2018 to 2019 and then just broke its new high through 4,000, after failing it three times. And like, I wouldn't be short that for, with all the money in the world. I can flip that chart to you right here if you want to put that up
yeah,
on your
yeah.
screen. So, it just shows you how it's been trending for a long time and then consolidated and keeps going. So that's what's driving the market. People want to hate it and people want to throw eggs at it, but the reality is it's a new earnings paradigm for some of the Fang stocks, and it seems like that is just going to continue. Now, I don't know what stops it, Patrick. I really don't. Eventually it'll just get too
Well,
overowned by every passive ETF, and there'll be no buyers left.
Well, I mean, isn't that really the case, right? Like, which is essentially at this moment, you almost have had no performance. Here's that chart you were sending. So, like, you had no performance uh, if you basically, or very low performance if you did not have exposures to the Fang. Like, they've been the leadership,
Yeah,
the generals that have been driving this market higher. And so
totally.
with this breakout, managers are chasing performance for career risk, right?
Yeah. Yeah. And the thing is, people want to take shots at fading it, and then we have a month like January where the subsectors of tech all ripped, from internet stocks, social media, cybersecurity. There were a couple of sectors where, where's my peak light? They were up 6%. Hold on. I got it right here. Sorry. Yeah, software and cloud were up, over 6% in
Yeah.
January, subsectors of tech. So, like, when those feel like they've got, young and fresh money coming into them, that's not something that I want to fade. So
Right.
this seems like this can go on, this year, certainly. And if we're going to have this POMO, liquidity available for anyone that needs it, no matter what their levered position is, and people don't have to worry about leverage for a little while, then again, this is going to continue for a lot longer.
And so you think that this could, irrespective of the coronavirus, you think that this can just, or is that something that could accelerate this to potentially turn sooner, right? Like,
Well,
I mean,
yeah, yeah. At some level, the coronavirus is sort of, a call on if you whether how much you believe the Chinese Communist Party right now. It's like, yeah, early on they were coming down hard on that doctor who passed away, and accusing him of potentially spreading rumors, and then the guy winds up dying, and he's really truly become a hero. And the picture that they sold us was totally false. So maybe the
yeah,
picture that they're selling us now is totally false. The people that are in the know are looking at the fact that there are signs. If you look at heat maps of China, there are signs that there's burning of organic substances around Wuhan, And the theory is that they could be burning more dead bodies so that they don't have to announce how many people have died. And as gory as difficult as that is to discuss, if that becomes
Yeah,
true and this virus starts spreading across
globally.
countries, yeah, then it's, of course, then the world is going to have to listen, because then the data is really going to filter out. But it seems to
Yeah,
be very localized at the moment in terms of how the market perceives it. If you look at the currency market, the yuan is really, really struggling now, and it's weighing on all the EM currencies and weighing on the Aussie dollar, and even weighing on the euro, for God's sakes. The euro
yeah.
hasn't picked its head up since the coronavirus came out, and that literally, that's a pool of weakness. I think
Fresh
they
year
call,
low on the euro. Like, I
yeah, I
mean,
mean,
we got a euro that looks like it is falling off the edge of a cliff down to those multi-year lows near 105.
it
Like
does.
it's
It does. I don't think we're going to accelerate down here, though. I really don't.
it's oversold.
Yeah, I think it's oversold,
It's
and I
like
think
crude
I know
oil.
why. I mean, I think I know why. The euro just broke above its 200-day moving average there on a really serious string of positive economic data. Right?
Yeah.
If you look at the City Economic Surprises Index for Europe, that thing went bonkers for like 3 months, and the euro started rallying. Rates were going higher. People were piling into European stocks, and it caught everybody off sides in European center. If you know what I'm
Yeah.
saying, Patrick. Specifically
Yeah.
in Europe, that's what was playing out, and everybody just had to say, "Oh man, all right, everything we just bought is now for sale." Right, from the euro
Right.
to the euro stocks to the European banks, right across the line, and everything like that. So I think that seems to tell the story of this, overblown scenario, and that's what happens now when you've got high frequency traders in the currency market. If they weren't
Right.
around, the dip probably would have stopped at a buck 10.5, but now it's down at 108.5 because they smell the sellers.
That's for sure.
You
That's
know.
for sure. Anyway, so why don't you tell all of our listeners where they can follow your work and get a trial subscription?
Yeah, man. You can sign up for a trial at tgmacro.com, the homepage of my website. You can find me on Twitter at tgmacro. The Morning Navigator subscriber base is happy and growing, and it feels pretty good right now for the year in 2020. So I'm excited.
All right. Well, Tony, thanks so much for joining us, and we'll see you next month.
Yeah, Patrick, thanks for having me, my man. Have a great weekend.
All right. Take care, buddy.